Hello and welcome to the look ahead for Q1 banks earnings season, which kicks off tomorrow. Now, the banks earnings come as they have outpaced the S&P 500 over the past 6 months, but whether they are able to maintain that momentum will depend largely on how this earnings season goes. Now, if we just have a look tomorrow, we've got numbers from JP Morgan, Wells Fargo and Citigroup, and this will be followed by next week by Goldman Sachs releasing their earnings on Monday and Bank of America on Tuesday. These earnings are released before the market opens. Now, given the high performance, the strong performance of the share price of the banking stocks, that does mean there's quite a high bar set going into this earnings season. The market's going to want to see numbers that support these lofty valuations. And I think they're going to be watching closely for any commentary surrounding sort of the prospects of higher interest rates for longer. I mean, it's worth keeping in mind that whilst higher interest rates on the one hand mean that the companies, these banks, receive more money for loans that have been paid out, it does also mean that they have to pay more out to deposit holders. So net interest income is not as clearly sort of benefited or not such a clear benefactor from high interest rates as you might necessarily think. So up first, we'll just take a look here. This is JP Morgan. Now, JP Morgan has just been trading at an all-time high ahead of these results at the start of April. This bank saw its most profitable year in 2023. Now, Q1 revenue is expected to be 41 billion US dollars. That's up slightly from 38 billion a year previously. Also, as far as net interest income is concerned, so that's the difference we were talking about between interest that's paid out and interest that's received. The bank is expected to post net interest income of 23 billion. That's just down slightly from 24.2 billion in Q4. Now, looking at the chart, as I said, we were trading at an all-time high there. Just coming down, testing the lower bottom of that trading pattern, the holding pattern that it had been trading in, and also testing that rising trend line support that dates back to November. That's the level at around 193, which is also the March low. So sellers are going to be looking to break below that level. If we get any sense of disappointment from the numbers, then we could see that support taken out, which would open the door to 185, which is the mid-March low. Meanwhile, if we get strong numbers, that could actually give the bulls some momentum to push the price back up towards the $200 the share all-time high. So also tomorrow, we've got Wells Fargo's figures coming out. They're expected to post earnings per share of 106, and that's down slightly from 123 in the previous year. Revenue is expected to come in at 20.19 billion. I think with Wells Fargo, there's a concern, and all the banks in general, actually, just with regards to the commercial real estate. That is an area that Wells Fargo is particularly large in, and it's an area that there are concerns about just as far as the high interest rates are concerned and the lower occupancy levels. So if we get some upbeat numbers from Wells Fargo, then that could save the share price, which is looking like it's trying to break out to the downside of that trading holding pattern. It's testing there the level around 56.40. Now, if we get a breakdown, then we're going to be looking to test that 53.80, the trend line that dates back to November. Upbeat numbers could see a breakout to the upside of that trading range. That would need a break above the 58.45 level to take the share price on towards the $60 the share. And just finally tomorrow, we'll also be watching out for Citigroup. Now, Citigroup could lag its peers as far as its numbers are concerned. Its trading performance has potentially been a little bit behind those of its peers. I think generally speaking, with the other banks, we might expect trading to be fairly buoyant. And also we've got these ongoing regulatory concerns that Citigroup is dealing with. So that could also impact its performance. Just as far as the share price is concerned here, we can see that it reached again that high of $64. Sorry, was that $64? It's just testing at the moment the 60 level, which is the rising trend line support as it's eased away from that 64 high. If we do see a breakdown below that rising trend line, that could be quite significant. It'll bring the 56.50 into focus. And I think if we get a fall below there, then we're going to see the sort of near-term uptrend will be negated, and we could see further losses down even to that 50 level. Upbeat numbers again might not be necessarily that likely from Citigroup, perhaps the last of the ones we're expecting to see upbeat numbers from. But if we did, then we might see a retest of that 64 level. I do hope that you like what you've watched. And if you have, then please do give the video a like. And if you would like to see more videos like this, then please do subscribe.